The Wall Street Journal editorial board, which has been critical of the president, praising the Republican tax bill today, saying it is the most pro-growth policy since the Reagan reforms of 1991 and 1986. But the board did note that Reagan's reforms were better for individuals. Joining me now with their thoughts, Moody's chief economist, John Lonski, and Hoover Institute research fellow, Lanhee Chen. Lanhee, I just want to get to you first. I was looking at some of your notes on this. You say we'll see faster growth, better job creation. 80% of taxpayers will see tax cuts because of this bill, including many middle-income Americans. So in your mind, this is a huge plus for the economy.
I do think it's a huge plus for the economy. I think that it's unfortunate that it hasn't been covered more that way. If you look at the impacts on individuals, you've got significant tax relief for many individuals, particularly in the middle class. I do think the corporate rate tax cut is hugely important. Immediate expensing is going to move up a lot of that capital expenditure into 2018 and 2019. So I think this is a very, very big deal. It's a huge accomplishment, and we haven't seen nearly the kind of coverage that I would have hoped. But then again, maybe as President Trump would conclude, we shouldn't be surprised given the orientation of much of the media.
John, you're the economist here. How much of a boost can this tax reform give to the U.S. economy?
Well, we've got some problems here. The first thing is,
Don't say that.
Well, hey, let's face it. We have a low personal savings rate. You have many Americans living paycheck to paycheck.
Yep.
Who's to say that this cut in middle-income taxes won't be saved instead of spent? That's one problem. Another problem is we have a very low unemployment rate, suggesting we may not have enough idle qualified workers so that if we do get an increase in demand, we can increase output in kind. We may end up with a tax cut that, sad to say, does more to stoke price inflation than to increase real business activity.
So really, to follow up, John, listen, this is, for the corporations, it's a far more positive piece of legislation. Several aspects. One, the repatriation, all of those billions, maybe up to $1 trillion overseas. First question to you, what are they going to do with that money?
Well, let's be careful about that. Yeah, there's about $1.4 trillion of cash held overseas by U.S. corporations. But for the most part, these are holdings of a relatively small segment of corporate America. Principally, what are we talking? We're looking at high-tech companies as well as pharma. So they bring all this cash back. Right. Are they necessarily going to invest it in new plant and equipment? Perhaps not. I think a lot of this cash ends up going to shareholders. And some of the cash will also be used to finance mergers and acquisitions, especially as far as big pharma is concerned. And of course, those large high-tech companies keep on going for these bolt-on acquisitions so that they can maintain their rapid growth rate.
Lanhee, John brings up some interesting points. How confident are you that corporations will indeed be, prompted through these reduced tax rates to actually invest? We already heard from FedEx and Southwest Airlines both saying they're looking to expand, and that's exactly what the Trump administration wanted to hear. How optimistic are you that this tax reform is going to actually create jobs?
I'm pretty optimistic. Look, it's not going to be universal. I don't think you're going to find that every sector and every business is going to make the same decisions. But there are clearly some situations here where businesses are going to make decisions to invest and grow in the United States, whether that's with physical plant or with employment. I think it clearly is the case. We are at relatively low unemployment now, so maybe we don't have too much farther to go there. But certainly businesses are going to make decisions based on the tax code. And the one thing that this corporate tax rate gives them is it gives them some certainty to plan around. That is the most important thing for a lot of these job creators. They need certainty, and they haven't had it for some time.
John, I just want to talk about the economy, GDP. I mean, we're right around 3% thereabouts. As we look ahead to the next year with these tax cuts in mind, can we get above that? Can we start talking about 4% in your mind?
I think that's too much of a stretch, but I do see growth between 2.5% and 3% next year, which is pretty darn good compared to our recent history on this front. And in fact, we could have 3% growth annually for the first time, I believe, since 2005.
Think about
believe
that.
it or not. So this has some positive features. Economic growth will probably be faster by 1/4 percentage point on average over time. And we would hope that with more business investment spending, with some clarity about the future of taxation, we'll reach a higher rate of growth for labor productivity, and that's going to be a positive for wages in this country.
A positive thought. I like that, John. Lanhee, let me end with you. Why is it that the Republicans get this tax reform through? It's going to cut taxes. And yet, when you look at the polls, a lot of Americans don't like it. Is that the Republicans' fault for poor messaging?
In part, it absolutely is. I think that they have not done nearly a good enough job of describing what the benefits will be. Look, there are a lot of benefits here, particularly to middle-income taxpayers, and you return to that group because that's the group that you really want to focus on politically. And you think about the doubling of the standard deduction, the lowering of marginal tax rates, potential wage gains from the corporate cut. There's a lot of benefits here. Republicans have been hunkered down. It's like they have PTSD from the Obamacare experience. They haven't been able to move forward and argue why this tax reform is good policy, but it is, and I think we're going to see payoff next year.
Yep, just sell it, baby. Thank you so much, Lanhee and John here in the studio. Thank you both for joining us today. We really appreciate it.